do we do with some of the hottest stocks in this market that just keep climbing higher that a lot of people are mystified by? For instance, how about the payment processors? Think the credit card companies. I'm talking about PayPal, Square. Buyers keep backing up the truck for these stocks. It's relentless. It's in part because they belong to the financial tech cohort that gets a boost whenever the actual banks go out of style on the Wall Street fashion show. Money just journals from one area to another. A lot of hedge funds try to mirror the sector weightings to the S&P 500. That way, they're less likely to underperform the benchmarks by big margins. Owning the fintech, in other words, the banks that are tech, lets them have financial exposure without the risk of owning a real bank. Don't get me wrong, I love these payment processors. I think they've got a great story as consumers worldwide continue to switch from paper to plastic. It's possible the next generation won't even carry cash in their wallets. Why bother when you can pay with your phone? There will always be transactions, though, and they'll be handled by the likes of Visa, Mastercard, and American Express, often through Square's hardware or PayPal's peer-to-peer payment network. The only problem? These stocks have all had huge runs, magnificent ones I absolutely hate to chase. But you know what? While my gut tells me to be careful here, my head tells me to take a more quantitative, more empirical approach to the payment plays. And that's why, what do we do? What do we do when we're just saying, you know what, these stocks have had a big run? Well, you know what? We're going to go off the tapes. We're going to go to the charts, look at the tape with the help of Bob Lang. He's the founder of explosiveoptionsdebt.net. He's also a brilliant technician. He's part of the all-star duo behind TheStreet.com's Trifecta Stocks newsletter. He writes with me, and he's the author of Know Your Options, because he can give us a better read on where these stocks might be headed. And he's had a great reputation with us. He's actually doing a lot of public speaking. He does a very good job if you see him around. Full disclosure, Lang has Visa and MasterCard in Trifecta Stocks portfolio, and we own MasterCard for my charitable trust, which you can follow by joining the ActionAlertsPlus.com club, where we talk about it endlessly. Can these names keep climbing? That's what we have to. Well, why don't we just start with the daily chart of Visa? Look at this, will you? And this stock's been roaring of late, surging to a new all-time high today. Lang points out the Visa recently broke out from a bullish flag pattern. That's a bullish flag pattern, okay? It's a formation, and that's where the stock consolidates after a big move by trading sideways. Big move, sideways, okay? Once you break out from a bullish flag, you tend to get a substantial move higher, and I don't think this one is done, right? Meanwhile, Visa's volume has been solid for weeks. You see the volume. It's very strong. The Chaikin money flow down here, CMF, okay, it's a tool that measures the level of buying and selling pressure. It remains pretty darn bullish. This indicator tells us that big boys have been buying Visa hand over fist since late November, and they keep doing it. Plus, I want you to look at the moving average convergence divergence. We call it the MACD line. That's a momentum gauge that helps technicians detect changes in a stock's trajectory before they happen. Lang points out that Visa just gave us a bullish MACD crossover right here, where the black line, got that, crosses above the red. And this is one of the most reliable buy signals in the entire book. After today's move, the stock now at 213. Lang easily can see it go up to 230 before it runs out of steam. I think he's going to be right. All right, how about Mastercard? This is a big position for Action Alerts. Full disclosure, we sold a little yesterday. Why? It's just gotten too big. We can't have the Mastercard fund. Excuse me. This cough has been bugging me. No, it's just a cough. All right, MasterCard, you got a very similar chart from the other pure play credit card titan. MasterCard experienced a powerful breakout on very strong volume in recent weeks. It was almost surreal because nothing was happening. But you got the same MACD buy signal we saw in Visa. See that cross? Same robust Chaikin money flow going back to the fall. Plus, there's this Ichimoku cloud. I always think it's funny, but it does work. It's a green space on the chart. Technical tool we talked about before. Use a bunch of moving averages to give you a read on the whole situation at a glance. When the Ichimoku cloud is green and expanding, look at that. See, it's expanding. You can't use two fingers at once, idiot. What happens? We like what we see. We saw it with MasterCard. The stock is likely to head higher. When I saw this work with Bob, I said, why didn't I hold on to a little bit? Why didn't I? Well, we still have a lot of MasterCard for the trust. But maybe we were being undisciplined by selling some. I mean, stocks at 345 today, made a new high. Lang thinks it's good at 360 in the near term. You know, what can I say? I think he's going to be right. That thing's a horse. All right, here's one that I thought would go down because of the coronavirus and the lack of travel. American Express. And this is where the daily chart's a little different. After Amex reported in late January, the stock exploded higher, then quickly pulled back, okay? So you can see this higher and then pull back. You know, that's, excuse me, usually a sign it's going to go right down. I mean, really, I hate that pattern. Since then, though, and this is when I thought, literally, that this was going to be Corona, that was going to be the big leg down for American Express. No, it started gaining some momentum. Lang points out that we're getting a bullish MACD crossover right here, right now. And the stock's been climbing on robust volume. And the Ichimoku cloud, well, obviously, look, it's expanded. It's green, and it's fat. Tells you that it could have a lot more upside. Right now, American Express just sits at 137, but it's up 6 points very quietly. It can break through its high at 138. Lang thinks this goes to 150. You know how many people are short American Express betting that worldwide travel is going to go down? I mean, this is the kind of thing. The hedge funds are dead set against this stock, and the chart is supreme. I sense a squeeze coming. Then there are the more technologically inclined payment plays. Why don't we start with PayPal? We used to have big position action. We caught it double. There was more to it. Here's a stock that seemed to lose its mojo last summer, but ever since it bottomed in late October, PayPal's been red hot. When PayPal reported last month, the stock pulled back, and that turned out to be a fabulous buying opportunity right here. Ouch! I did nothing because I had gotten a little more negative. I mean, the illness. Look at this. It didn't skip a beat here. Even if you missed that chance, Lang says that option traders have been all over this one with strong call buying in March contracts and beyond, meaning they believe this thing's not done. I like that. Shaking money flow, really great shape. Look at that. That's really fabulous. Institutions can't get enough of this stock. Ichimoku Cloud, real good, okay? With the stock's recent breakout to new highs, it's now 124. Lang sees this one going into 130s. I agree. Finally, check out the weekly chart of Square, which I'm concerned about because Shopify is moving in against them. This payment technology company with a money lending kicker, well, they can extend credit to the small business clients, collect directly from the receipts, had a roller coaster year in 2019. That was because, remember, Sarah Fryer, whom we love so much, left, go to another company. In the last couple of months, those Squares come roaring back. People are now putting that in the rearview mirror. Until the last few days, the stock has been pushing against a strong ceiling resistance. Yesterday, Square broke through that ceiling. Today, it tacked on nearly $3 more. Now people are shorted off the Shopify. Believe me, that's what happens. Meanwhile, Lang points out that the money flow is fantastic. Look at this, will you? Ichimoku Cloud getting there. Just turned green. You probably can't see it, but I actually had to. I inspected it for you. Plus, he tells us the call volume has been very strong of late, suggesting option traders believe Square has more room to run. After this breakout, $100, 16% run. Yeah, I mean, Shopify, if they want to come in, it's not going to be quick enough to stop this monster. Bottom line, as much as these payment stocks have run, the charts, as interpreted by Bob Lang, suggest Visa, Mastercard, American Express, PayPal, and Square all have more room to run. I think he makes a good point, but you know what? I like these names even more if they'll pull back, or also wouldn't have sold a little bit of Mastercard. But what can I say? These are best in show. I'm going to Marietta in Virginia. Marietta.
Hello, Jim. How are you?
I am good. How about you?
Oh, just great. I'm a longtime investor, and I watch your show daily.
Thank you.
And I want to ask you about Bank of America. Should we sell? Should we hold? Or should we buy? Okay.
I don't really like the bank stocks, to be honest, because they seem to be trapped by this ridiculous yield curve. But Bank of America is not an expensive stock. I think you can own it over time. I think it'll be good. I think Warren Buffett will say good things about it when he speaks to Becky. I think you're fine on it. The oils and the banks can rally here, but as they rally, cut them back. I think you have to do that. They're just not as good as other stocks. What can I say? All right, the payment processor stocks, they are red hot. And Bob Lang says it could get even hotter. I'm not going to disagree with him. Next time there's a pullback, I would do some buying. I don't even know if you'll get one. All right, there's much more Mad Money in. Who says this isn't the most interactive show on television? You know, a few weeks ago, I recommended a little company called Everbridge as a homework item, and the CEO joins me tonight. Then, is it too late to get in and out and in with this market? I'm going to give you my take and some real lesson about what you can and can't do. And all you call is Rapid Fire in tonight's edition of the Lightning Round. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.